You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean but one thing. It is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time once again for the old Option Block, a.k.a. what the cool kids are calling the OB, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo. I will be your host, your guide through this 1 hour journey through the world of options. Reminding you at the top here, if you like what you hear, this show, anything we do here on the network, usually a couple of shows hitting you a day here these days. Keep those reviews, keep those comments coming on your platform of choice. It really does help new folks discover the content. Of course, if you have questions, particularly for a day like today, it is Mail Block Thursday after all. So if you have questions about those crazy options things, hit us up. We do love to hear from you guys. Let's see who we're hearing from today. First, let's go out to his palatial fortress on the far-flung shores of Maine, where we are joined once again by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. I know it's a hard day for you because I know you were a huge fan of Siegfried and Roy. Siegfried having passed away, so I'm glad you could soldier on and join us today, sir.
Oh my gosh, is that the last of the Siegfried and Roy pair?
I do believe it is.
Wow, I must be getting old then, because I just feel like they've been around forever, but I guess they have been around forever, so very sad day. I actually didn't cross my radar today, I have to be honest with you.
There we go. I knew somehow some part of you would be broken up. Ironically, I actually had family at that very last show they did where the Tigers infamously attacked them. How they told me about how strange it all unfolded, and that to be there kind of live, almost front row as these Tigers leapt at them is apparently pretty crazy. So there you go. An inauspicious moment in Las Vegas history now concluded here as we keep on rolling with the show. I'm not sure if he's a fan of Siegfried and or Roy. I guess we'll find out. He is the uncleist of Mike's, a.k.a. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. Are you a fan of tiger-based magic, sir?
Can't say that I am. I guess my sadness is actually yesterday the godfather of powerlifting passed away, Ernie Franz. He was the president of the World Powerlifting Congress. He was actually my coach in high school and helped me set some world records at the time. And yesterday was kind of a sad day for me along those lines. But you brought up death, and that's my death story. So that's my sad story for the day.
There we go. Even the diehard optimist, Uncle Mike, kicking things off sad. I took things off in a dark direction. So let's instead let's brighten our day, because we are also joined by the dynamic duo from Demand Derivatives, Mr. Bob Krause, the CEO, and a good old friend, Mr. Don Schlesinger, the president over there at Demand Derivatives. Gentlemen, welcome back to the Option Block. It has been too long.
Hey, thanks, Mark. This is Bob. Hi, everybody. Glad to be back. Really looking forward to it.
Likewise. Thank you very much for having us.
All right, with the gang assembled and all this morbid talk behind us, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, let's get to it. Let's kick things off, see what's trading, what is lighting up our screens today. It's another day that ends in Y, so that pretty much means you're going to see mostly green on the screen. That's pretty much what we're seeing yet again. Most of the major indices slightly in the green. Again, today, not a ton. S&P up about 0.25%. The Dow and NASDAQ actually up about 0.4%. So equal percents out there. And of course, all that green means a little bit of red, not a ton, a little bit of red on the vol screen today. VIX cash come into showtime a little bit north of 22, about 22.25. Puts it down about 1.25 points from our last show. VVIX, the vol of vol, about 118. That's actually down almost 2 points as well from last show. So still frothy, still around that 120 level we always keep an eye on out there. VXX, a product you guys love to fade, about 16.35 coming into showtime, puts it down almost half a handle, about 0.4 point from last show. And we got VolQ, one of the newer additions to the volatility landscape, a.k.a. the at-the-money vol of the NASDAQ 100, at about a 25 even, kicking off the show. That puts it down about 0.5 point from last week. Of course, maybe some of this rally driven by our friends over there in Goldman Land, saying they expect about a 14% increase in the markets today. Of course, maybe also in line with what you guys were thinking out there in our poll earlier, where about 65% of you said you expect the markets to end higher on the year. So maybe Goldman lining up with you guys. And of course, everyone's favorite name to watch. We said this on our takeaways from 2020 episode yesterday on Options Bootcamp. Only really half jokingly, all you had to do last year was just buy Tesla and Bitcoin. That's all you needed. Well, Tesla actually managed to have a little bit of red on the screen today, off not quite 1% on the rumors of this potentially massive recall. 158,000 cars from NHTSA, the National Highway Transportation Safety Authority, I believe is what that stands for there. That's usually a pretty small recall for a large manufacturer like a Ford. For a smaller one like Tesla, that's an enormous number. And yet the stock, as of this morning, had barely budged. So it was actually up for a little while there. So massive recall. Let's rally the stock. At this point, nothing can kill the Tesla bulls out there. But we were just talking about vol. Let's go back the opposite of the way we came. Let's start in the land of all things realized volatility. Bob and Don, we shall start with you folks out there. What is lighting up your tape out there, and what's going on in the world of realized vol, gentlemen?
I'm just looking since the last time that we were on, and we did speak a little bit, at least I recall doing it, about the rather large diversion between what VIX and implied volatility compared to what obviously was the actual market volatility, and we talked about that differential being historically quite large. And I said what I thought might happen would be that they would start to head towards each other, that gap would narrow, not just by one coming down or one going up, but more likely that both would happen. So we saw a little bit of that since the last time we were on, in that VIX is now in the 21 handle, whereas realized volatility that had hit a low of just a little over 8 at year end and was in the 9 handle the last time we were on, is now 10.73, which is 21-day historical volatility just ending. So that gap is still considerable at about 11 points or so. But as I recall, it was something like 14 or 15 the last time. So we're getting those movements of VIX coming down to historically more normal levels, and realized volatility still below what's normal, but at least heading in that direction.
And so I'd like to talk about a little bit more theoretical stuff here. So we have two forecast indices in our volatility index suite. Last week I told you that we calculate or explode volatility of each asset into like 40 buckets, whereas most indices, aggregate stuff, right? So the S&P aggregates 500 things. We take one asset and explode it into 40 buckets. So one of those indices is our forecast. We have HARC, and actually two of those. We have HARC forecast volatilities and rough forecast volatilities. And here's the theoretical part that I wanted to talk to you about. Arch models. Now, let me step back to Arch models, which were created by Robert Engel. He won a Nobel Prize for this stuff. So I mentioned that last week, and then he actually made his models a little bit better, and he called them Garch models. And then we found two professors that created these forecasts that are even a little bit better. And those are the RealVol and the HARC-Vol models, which we have programmed into our indices. What's interesting, I find, is that those models are just looking at history, right? All they have is data. So they're looking at all the data, and they're coming up with a forecast of where realized volatility could be. So they're just looking out the back mirror, so to speak, and they're forecasting where this car is going. And so you would think that a measure like VIX, which, is traded, right? I mean, it comes from all of the option premiums and is theoretically some kind of forecast of future risk as well. Well, it incorporates not only all the history, because everybody kind of knows what has happened already, but some kind of forecast, right? So they're looking at, the potential for the Capitol riots and the election, not the election, the transfer of power next week and things like that history cannot possibly find, right? There's nothing in the HARC model, Garch models, RealVol models that could possibly be looking at next week's events and saying, oh my God, we should be prepared, or I wouldn't worry about it, or whatever. But whatever the case may be, traders should be able to outperform history. And that's not the case. These models perform better than VIX does. So that's what's really astounding about it. And that's why I think that Robert Engel, won a Nobel Prize for this stuff. I mean, it's really just looking at historical volatility and predicting future volatility. I mean, that's what those models are all about. So it's really interesting that you can predict the future so well just by looking at the past. In fact, better than the market can, which seems really very counterintuitive.
Well, if we didn't look at the past to predict the future, there'd be nothing to talk about here on a show like this here, Bob. We'd all be out of business. I always love the names of things. RealVol. It always sounds so interesting, so compelling. Remember, listeners, these guys, when they're not busy here talking to us, are still cranking away over there on their crowdfunding. It still is running, I believe, through the latter portion of January, listeners. So if you're intrigued, you want to learn more, demandderivatives.com is the place to go. You can get a piece of what Bob and Don have been cranking away on for so much time over here. Since we're talking all things volatility, I'm sure Mr. Rock Lobster, that Vol man, was very intrigued by all that. So put on your alter ego now, sir. What else is Vol man up to? And is he offended to be talking about all this realized vol? Because I know Vol man is almost exclusively implied, sir.
Well, After being on the show with Don for so long, if Vol Man was just exclusively implied, he'd throw a phone at my head. Back in his I don't know, was he Morgan Stanley days or something? Like, what do you mean? Just implied volatility? What the hell? So I don't know. I don't know if he could sit there and countenance that, but I think one of the biggest. Why is VIX where it is? People aren't selling options. I think that's the problem. I just think, people are getting smarter. They're like, screw it. I'm not going to sell my stock because they just go up forever. I'll just buy some puts if I'm worried. And it's hard for vol to go down when that keeps happening. So as near as I can tell, it's just demand. And this just, all I can say is there's no other word for it or phrase. Crazy election cycle. I thought, like we had 2016 and then you had that overnight, where market dipped and came back storming when Trump got elected. And then we're like, oh, wow, we'll never see anything like that. But I'm like, So not quite. This is actually, we had quite an election cycle. Vol was up near 40. I don't think anybody knew what was going to happen. And I think the vol is still bid because they're waiting for Biden to get it. They want to. This whole cycle has been, walking through the gate, meaning like everybody wants to see that election over, right? Okay, let's see the dust settles. Okay, vaccine. Okay, now we want to see the rollout. Like they want to see this hard because I think there's been so much, let's just call it creative news that has been coming out over the last several years on all kinds of stuff. The Chinese, they don't have any virus left in that country yet. They're going to lock down 40 million people or 20 million people again. The news, you don't hear that. It's like nowhere on the news. So, like, the virus isn't going away. We do have vaccines. And I just think that that vol's not coming down just because it's so easy for that match to hit the gas and, just explode the market one way or the other. What we haven't seen in a while is a pretty good sell-off. We had about a 2 or 3%, 2.5%. It only lasted for a day a couple weeks ago. When the crazy stormed the Capitol, we got maybe a 3/4 or 1 point move in VXX, I think, tops. So, one thing about implied vol is when it's already expensive, where's it going to go, right? If anything, people would be looking to get out of their puts and crush some downside curve or something like that. But the vol's already pretty darn expensive. We're not moving. Look at the implied vol curves in SPX on the weeklies just from now until about a month from now, and they're super steep because not much is going on. You got the 11 handle for January 19th. Now, granted, it's got the 3-day weekend effect in it, so it's pretty cheap, but or it appears to be very cheap. You have 15 vol, though, for Jan 22. So it's a 3-day weekend is definitely pressing the 19 and 20 down. So they're not expecting tons. But the vol's still pretty healthy going back. So I don't think there's just enough sellers of juice to make the vol go down yet. And having the market go straight up since I think, right, pretty much the first week in November, when everything just had that Friday before, which was kind of sad before the election. And then, I think oil stocks are up like 40% from that level, 40, 50%. Huge move. So, even though everybody thinks vol's supposed to come down, Don can probably explain it better than I, but, hey, realized move, 4% up is still 4% up. That's 50 vol at least, right? Or actually quite a bit more than that. So, these huge moves, who the hell, you can't sell the straddle for $20 when we're moving $40 on the upside. It's just not going to happen. So that's the problem. We keep going up, keeps pulling the curve up, and vol doesn't come down. But I'm sure the realized vol master, since he's in the room, has some words on that, but that's my observation just looking at the paper all day long. And until things kind of stop moving for a while, I mean, SPX not breaking 100 handles every week. I think it's going to be hard for VIX to get into those teens.
Any thoughts on that, Mr. Don, and his allegation that in your own parlance, people can either sell or not sell options? And according to the Rock Lobster, at least, people are clearly choosing the latter, sir.
Yeah, I think that's probably part of it. You're in a situation at the moment, and of course, when you talk about these 100 handle moves or so, we sometimes lose sight of the fact that at 3,800 for the S&P, that these 100 handle moves on percentage basis are really not all that spectacular. Like 2.5% or so, and with classical calculations for daily volatility being about 1%, 2/3 of the time you're within that 1% range, then you realize that you're outside of that range by 1/3 of the time. So having 1/3 of a month, about 7 trading days, have percentage moves of greater than 1%, and perhaps even 2% isn't all that uncommon anymore.
That is the case, and now let's move along here to our resident optimist. Let's see if he can cheer us up. Maybe we can cheer him up today, Mr. Uncle Mike, sir. Still a bit of an Uncle Mike type of day. Most of the major indices in the green, if ever so slightly. What out there is lighting up your tape today, sir?
Yeah, I would agree. We have the 3,800 mark in the SPX is something that we are definitely above and seem to be holding for the time being. So we're at 38.15 right now in the SPX. So that's definitely a move or a number to where we're holding above it. We're still below the all-time highs with which we set on January 8th. 2 days after the Capitol invasion. So we're still above that, or we're still not at that level. But nonetheless, we are there. Silver appears to be holding its little bit of a downturn with which it's had recently. And looking at SLV, we're just around the 24 level. So that's an area with which it seems to be leveling out a little bit. And the big thing that I'm seeing right now is that energy is just continuing to go higher. And I think it's a combination of a few things. You could argue that the inflation with the U.S. dollar perhaps going down, that's a reason for it because of the fact that, let's face it, we're printing more money than we usually print as a government. Also, we have a little bit of demand for oil again, and that third world countries are going to need oil. Americans are going to need oil. A lot of people are going to need oil if you leave the house. A lot of times when you leave the house, you take your car to go places. And if you take your car to go places, you need gas. And in order for the car and the gas to work, you need oil. And so because of that, I think that's definitely benefiting because let's be honest, both oil and energy stocks in general just got a shellacking in 2020. And so I think it's kind of one of those areas with which if you're looking to get value and you believe in the oil sector and the energy sector, it's definitely one area with which to look. And that's an area with which it's definitely having a lot of movement at this point in time. 10-year note, still around the 1% level. So we have the ability to kind of gauge that and see if we're at risk on, risk off. But it does appear that the underlying, the note itself, not the yield, is kind of flattening out a little bit over the past few days. So it'll be interesting to see if the 10-year note makes another run at a higher yield. So that is what I am looking at right now, and that's my story.
Thank you for that, Mr. Uncle Mike, sir. Let's see what the story of the market is today. What tales are they telling us out there? Pretty active tale out there in VIX land. Actually, surprisingly active. Looks like some paper is going up out there. I'll have to dig a little bit to see what is printing, because as of a few minutes ago, 660,000 contracts on the tape for what is otherwise a kind of shrugging your shoulders kind of day out there, at least from a vol movement perspective. The ADV is 446,000 contracts, so they're already well past that. So something sizable is printing out there in VIX land today. SPY, not the same story out there, about 1.85 million, right around half of the ADV, which is about 3.7 million out there. The S, 700,000 contracts. The ADV right now a little bit north of 1 million, about 1.1 million. The Qs, a little bit north of 500,000 contracts on the tape. The ADV, 927,000. And the small caps, at least IWM, they're also lighting it up today as well. 640,000 contracts on the tape there versus ADV about 661. Let's move on out to see what you folks are trading in the single name territory. Pretty active day out there as well. Cost you 343,000 contracts to break into our top 10 today. That's pretty juicy. Usually it's around 100,000+ less than that. Some days it's a couple 100,000 less than that. Today, 343,000 contracts get you all the way to number 10. That's our old friend out there, Tilray. Haven't talked about them in a while. Number 9, Facebook, 367,000 contracts. Number 8, Baba, still lurking in the top 10 out there. Number 8, 390,000 contracts on the tape. Number 7, good old Ford. Ford back in the top 10 again. 406,000 contracts on the tape. Number 6, NEO. NEO away from its number 1 spot all the way down to number 6 today. Still good for some sizable paper. 459,000 contracts. Number 5, good old Space out there. 459,000 contracts as well. So a bit of a tie between number 5 and number 6. Number 4, Intel, my old stomping grounds. 482,000 contracts on the tape. Number 3, GameStop. Remember them in our big GameStop versus Bed Bath & Beyond poll out there. GameStop putting up some numbers today. 549,000 contracts on the tape. Let's see what's up out there in GameStop. Oh, it's moving. 8 3/4 points, or about 27, almost 28%. Wow. The board getting a makeover out there. Strong holiday sales. All this driving GameStop. Wow, through the roof out here. We were just talking about the potential death knell of GameStop on this show not too long ago. And here they are now, up almost $9, almost 30%, trading 40 1/4 or so right now. So, wow, big day for GameStop. When GameStop can hang with the big dogs out here, it's a crazy day. Number 2, Tesla, another day that ends in Y. The stock's rallying, or kind of off now a little bit. And the threatening massive recall, doesn't matter. Stock barely budges. But it's good for 724,000 contracts. Just a tick, just a hair behind the big dog out there, which is Apple at 736,000 contracts. So kind of a quiet day for Apple. Usually they're north of 1 million at this point. But interesting day nonetheless out there for a lot of these names. Let's look really quickly. Yeah, looks like the most biased paper we have on our top 10 here is good old Space. 86% of that coming on the call side of the ledger. Let's look really quickly here for some earnings move results. You guys know where to get all this information. It's all completely free over there, theoptionsinsider.com. Click on that options news and articles tab, top right corner of the page. Once you're done perusing the legion of shows that are available on the website, and you can see these earnings move results, and earnings season reports for yourself. We got some hot off the presses from this morning for BlackRock. They were popping off before the bell. They were trading at a whopping $779.75 going into this announcement. So that's a fairly hefty price tag. Maybe they're trying to become a Berkshire Hathaway style and envy that share price a little bit. They were pricing in 2.5%, delivering about 3.5% to the dark side out there. So maybe a little bit of outperformance. I said this before. Maybe we're getting to that point, that inflection point where they've squeezed these earnings straddles, this earnings vol enough throughout the entirety of 2020 that maybe you're starting to see some outperformance out here. Maybe. We'll see. We've got popping off here tomorrow before the bell. We've got Citi, JP Morgan, PNC, Wells Fargo, a lot of financials out there. So we'll know a lot more as those names pop off. We'll look at a couple really quickly. JP Morgan, they're trading 140 and about a half. They're pricing in $2.52 in the past. They priced it in $3.54. In the past, they moved $2.52. So a little bit of rich vol there. Wells Fargo, $33.80 is where they closed. They were pricing in $1.60. In the past, they moved $1. So a little bit of extra juice. Let's see if the same holds true beyond the financials. Financials are kind of beset with their own problems out there. Let's go a little bit beyond that to Netflix, which is popping off next week on the 19th. They were trading $507.79. Wow, these price levels. And see, they're pricing in $34.96, so almost $35. In the past, they moved about 28.5. So a little bit of a similar theme out there, a little bit of extra vol being priced in Netflix as well. So interesting. It's not just the financial listeners. So perhaps, I put that with a big question mark, perhaps this is that moment we've been waiting for the entirety of last year when the vol would start to kick in and we'd actually see some movement as a result of these earnings announcements. We'll see if that's the case as we keep on rolling. Right on into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time to get weird, time to get wild, and perhaps whimsical here on the old OB. We're going to kick things off, unleash our Eye of Sauron, see where its eye falls first. And it looks like it has fixed its game on good old Macerich. It's a REIT out there that invests in what else? What else do REITs invest in? Of course, shopping malls. That's what they all seem to invest in these days. Ticker symbol MAC. Trading right now, $14.66, having a pretty decent day, up $1.86, nearly $2, about 14.5%. This one's had an interesting year, as you might imagine. A lot of the retail-oriented REITs have had a troubled year. A year ago, they were trading about almost $26, about $25.85, and then they kind of hovered at that level for a while until, you know what happened. The big sell-off happened there in late February and continued for them into March. And for this guy, actually, continued all the way till April, where they bottomed out at around $3.44. So from almost $26 to $3 and change. That's quite the drubbing, I think, to use a technical term out there, listeners. Then they rebounded quickly again up to almost 9 in April, but then they gave it all up again down to about 5 and change. Took all the way up to June 8th. They finally got back to 13.13. Now, June 8th is that day we've watched quite a bit. It seems like a lot of the market outside of the FANGs really hit their apex there and never managed to recover. And that was a similar story for good old Mac here, because they sold off again from 13.13 right down to about 8 and change and kind of languished in that range until pretty much November, where they started rallying and they didn't get back up north of that. They still didn't get to that level. They were at 13.13 on June 8th. They didn't get up to a level like that. They hit about 12.25 back on December 9th, and they gave it all up again until pretty much this past week. It's the first time they've blown past their June 8th level to where they are right now, 14.62. So an interesting year. Most of it spent kind of languishing in the doldrums, but looks like a little bit of an uptick out there in good old Mac land out here. Let's see what our Eye of Sauron found for Mac. Let's look and see if I see any news on this recent uptick, maybe outside of just some earnings. Looks like Mr. Rock Lobster, maybe someone's not buying this recent rally to the tune of 9,044 of the March 15 puts going up. So these are slightly in the money puts, a lot more in the money this morning. They were still pretty rich when they went up, listeners. They went up for $3.20, opening over there on, looks like the Amex. And they were, lifting the offer for $3.20. They were $2.65 at $3.20. There are earnings coming up, but they are technically within this cycle. They're not in March. They're actually in February. So they have a lot of time post-earnings on this trade. But still, they will get a little bit of a hedge out there for earnings. Probably one of the many reasons why this vol was so juicy. If you're wondering, listeners, it was a 116 volatility that they paid for these puts out here. Mr. Rock Lobster, is that your takeaway as well? Someone's looking a little bit spooked maybe and is lifting some offers and paying some triple-digit vol for Mac? Or you think maybe they got the fill of fills and they were writing your old favorite, the line in the sand put, sir?
These are the 15 puts, right? Slightly in the money on these ones?
Yes.
So that would be an aggressive line in the sand put. I don't know if Dom would approve of a put that's that aggressive, because it's a $0.50 in the money. But and this just goes to the same thing that we just talked about when Dom was saying, yeah, look at this stock. It was $11. Now it's 15, almost $15 2 days ago. It's a REIT, right? Vol was already high, and now it's like busting over 100. Just, you remember what a liquidity provider is like, right? Morgan would come in and say, hey, I want to buy 1,000. And then you're like, okay, I sell 1,000. Then after that, they're like, okay, where can I buy 5,000? And you're like, okay, here's, and then they're like, okay, now we really want to buy some. So it's like, that's what it's like right now. So even stupid stocks like this, and, I'm sure it's a very nice REIT company or whatever. But so anyway, what I would say is, there's a lot of money floating around from the Fed. And it appears to be going in the equity market, because where the hell else is it going to go right now?
Exactly. Where else would you possibly spend money? Food, rent, mortgages?
Yes, where else? Exactly. Food. No, they're like, we don't need that. You just buy Tesla and you have your food for the year paid for. You just buy 2 shares.
Yeah, you're eating for a long time.
Yeah, it's a layup. So there's definitely some of that in parts of the market. So, if you haven't already ridden that train, I don't know what to tell you, but I think it's probably not a bad idea to trim some of that stuff. Lots of bargains everywhere, actually. You just got to look for them. But this, I think they're just buying puts, and maybe it's a put and stock play. I do not know. But just with the vol so high, if somebody's buying this, and then why? Why? I think the stock's going back down to $9 again. So it's an odd purchase to just buy that big a chunk of juice.
That is an odd purchase. That's why we put it in our odd block, and that's why we will come back to it and keep an eye on this bad. Let's move on to a name we haven't talked about in a long time. This is Ericsson, ticker symbol ERIC, E-R-I-C. They used to be part of, that handset alliance with Sony, and they used to make a lot of devices that were interesting. Most of them didn't really come to the U.S. market, but still interesting stuff. Now Ericsson kind of its own beast out there, and let's see what they're up to right now. $11.76, kind of unched on the day, so it's not a big mover out there from an underlying perspective. A year ago, they were trading $8.79, so about $3 south of where they are right now exactly. They sold off a bit in the great sell-off, down to about $6.15, but they rebounded pretty quickly. By April 17th, they were trading almost $9, and by the big day everyone loves out there in June 8th, actually this one, ironically, on June 3rd at about $9.84, and it kind of sold off again. Then by July, it had rallied again, so it didn't languish below its June 3rd high for very long, because it got up to almost $12 again in July, and it's kind of bounced around this, looks like 10.5 to 12.5 range for pretty much the rest of the year, all the way through till right now. So it's kind of still in that range of 11.76 right now. So not a lot of underlying movement driving some paper out here, but nonetheless, our Eye of Sauron sniffed out interesting little options palooza going on out here, to the tune of what we first noticed was almost 5,000, 4,837 to be precise, of the April 12 calls, going up for 75 cents. That is on the offer, but it was late, so bear that in mind. The execution a little bit wonky out here. Also saw the exact same number of the puts going up on one strike below the April 11 puts, 4,837 of those as well. So first off, you're like, interesting. Maybe a bit of a risk reversal. You dig a little bit further, you find the April 12 puts also went up as well for 91 cents, kind of mid-market there, also 4,837 times. Now you got all sorts of funky analysis to go on out here, because they all went up about 2 minutes apart from each other. So they are effectively, obviously, the same trade, just put up a little bit out of sequence here. So you could have a couple of things. You could have straddle with the put kicker. You could have a good old conversion reversal with some extra puts, maybe rolling up the puts to a strike like that. That'd be kind of interesting. But also another addendum to that, that's why we called it an options palooza, because they actually did about 2x of that paper on every strike. We saw almost 10,000 of the 11 puts trading today, almost 10,000 of the 12 calls, and almost 10,000 of the 12 puts. So on a name that's usually fairly sleepy, we saw quite a bit, almost 30,000 contracts going up just in this one trade. So Mr. Rock Lobster, we have many different votes for what this could be. We could have, like we said, rolling up your puts and then deciding perhaps to turn it into a straddle. That would be interesting and or weird. Conversion reversal with some extra puts thrown in there, the exact same amount. That would also be weird. Either way you parse this, it's kind of weird, which makes it a good candidate for the odd block, sir.
It does make it a good candidate, I'm looking at this and I say, what the heck are they doing? I was trying to figure out this one myself. It does appear that they paid up for one put to sell another. And the range of this stock has been about $1 for 4 months. So, and I'm reminded when you're selling volatility, you really don't want to sell the vol into a stock that's doing nothing, especially for 4 months. Just because I have a lot of bad memories of doing that. But you look here, and I think it feels like all sort of opening paper. And oddly enough, it feels like a kind of sort of a covered straddle where somebody's just selling the 12. They're like, this Ericsson thing is never going to move, and we want to do a little risk control. So, and then quite surprisingly, they're leaving the upside open. So, I think maybe some kind of covered straddle. They own the underlying, and they're just going to try to take in, they're going to try to take in like $1.20, something like that against their stock. And given the last 3 months, that actually would be a better return than what they've got. So,
yeah, you can't fault them, I suppose, for wanting to get a little bit extra juice on this somewhat sleepy name out here, sir.
Yeah, I feel like they have to have the calls covered, though. But, where's Ericsson going? But as I say this, every weird stock in the world, like they say Bitcoin or green, and all of a sudden it's $22. So it's odd they chose to keep the 12 call uncovered. So I figured this must be a good stock.
Let's let the dice ride on the calls, but let's put the puts on. What do you guys think is up here in Ericsson? Let us know. We'll keep an eye on this one. We'll come back to this one as well. This is the funky one, and you're right. Looks like it has a little bit of upside uncovered, which, if you got some stock in your back pocket, could potentially explain this bad boy. In the meantime, though, let's wrap it up here. Another newcomer here on the odd block. This is Viatris Inc., ticker symbol VTRS. This was formerly known as Mylan. This is a generic pharma company. Looks like they merged with Upjohn, and they created this new entity called Viatris, which is trading right now $17.68, off about 72 cents, or about almost 4%. This is the name that a year ago was trading about $22, so a wee bit north of where it is right now. It sold off in the big sell-off. Didn't get annihilated. It sold off not even $6 really. It got down to about 15 and change here. So yeah, a little bit north of $6. And so didn't get annihilated, and it kind of hovered in that range. It stayed in that 15 and change range for quite some time. It rallied like most of the market did on June 8th to about 1878, and then it sold off again right down to that 15 and change range again, where it hung out pretty much the entirety of the year. It had a weird day on November 11th. I'm not sure what happened out there, but it gapped down ever so briefly. On the 10th, it was trading $15.64. On the 11th, $2.19, and then back up to $15.54 on the 12th. So maybe a bit of bad data here on my service. That's certainly a huge swing if that it did indeed take place. And then they kind of rallied up, and they've been slowly rallying ever since to where they are right now, $17.70. Aside from today's sell-off of about 70 cents. Let's see what our Eye of Sauron found out here. Looks like Mr. Rock Lobster, perhaps. We got your old favorite making a comeback, the line in the sand put. Let's see, 4,700 of the Viatris Feb 15 puts, easy for me to say, expiring on the 26th. Going up for 30 cents. This market, by the way, listeners, you'll love this market. These puts were no bid at $2.80. That's atrocious. That's one of the worst markets we've seen in quite some time here on the odd block. That's embarrassment for all involved. But they got them off for 30 cents. So they found something there for 30 cents. Looks like Mr. Rock Lobster, given what we've seen out here, it has the whiff of a line in the sand unless they bought these puts that were offered at $2.80 for 30 cents. That'd be impressive as well. There are earnings in this cycle, and they are the day before, listeners. So the earnings are on the 25th. So clearly, it's like someone may be trying to include that earnings cycle in their trades. They put on an option that goes out the very next day. Either way, a bit of an interesting one. A lot to unpack here, Mr. Rock Lobster, including this gets our award. I mean, I know the year is young, but so far this is our award for the worst market we profiled here on the show, sir.
Well, you know what's funny, too, is the volume is not small in this name either. I mean, right now I think option equity volume is off the hook anyhow, but not totally small volume on this one. And I think somebody did get the line in the sand put extraordinaire. This is probably a favorite customer, and like sitting on that desk, they're going to buy those puts. They'll buy some stock, they'll put their weight, and then they'll blow a bunch of juice out against it, and they'll end up making their money, and their customer will be happy. and they'll make gosh knows how much in commissions for that sale, right? So it does have that look about it. And even with all the funky markets in here, the range of the stock isn't huge this year, for it's only like a couple bucks. I mean, the low in the sadness was $12, but, recently you've got like a 14-18 range. So I don't know what Viatris does. It sounds, remarkably like some other kind of product that we know of, but really, healthcare distribution, something or other, really, really odd. Really funky thing. Anyway, it's one of those companies that has a big book value, pretty good market cap. Never heard of it, but interesting. Anyway, interesting type of company. But yeah, I think this has all the hallmark of the line in the sand put. And, favored customer, somebody, big firm taking down the other side. And they will position, they will sell something against us at some point and figure out a way to make a couple bucks on it. So not totally surprising that way. But I think it's an interesting line in the sand put, just based on company value and all that kind of stuff. So somebody did some arithmetic, as all our line in the sand put people do. They always tend to put that number like below a book value or at an all-time low or just some crazy scoop price. And that looks like what they're doing here with this one.
Well, we'll keep an eye on
100 Viatris.
Yes, Viatris. You're right, though. This one is actually more active than I thought. When I first saw that market, I thought this thing did like 200 contracts a day, but it does 13,000. That's the ADV. And so far today, there's 47,000 contracts on the tape, including about 10,000 of the Jan 18 calls, followed by almost 5,000 of our friends here, the Feb 15 puts going out on the 26th. So this is a more active name than you'd expect. So there could be that market they disseminated was just nonsense. That wasn't really the market. Because I can't imagine anyone getting that market and being like, I shall trade within those. That is an acceptable market to me. But we'll keep an eye on this one as well, listeners. Interesting one. Now, speaking of interesting, you guys always have interesting stuff in store for us. It is time for you guys to take the reins. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Before we get to your questions really quickly, we like to ask ones ourselves, and we had a fun one this week inspired by one of our conversations on our shows from earlier this week. Very simple question. Two very lofty, very volatile names that everyone's obsessed with right now, Tesla and Bitcoin. Quite simply, which one's going to hit the 1T, the 1 trillion market cap level first? When we posted this poll earlier this week, Bitcoin was at about 600 billion, Tesla about 760 billion. So Tesla a little bit ahead in the race. And early on, the voting was pretty hot and heavy and pretty even. It was pretty close to 50% for each. Seems like Tesla is pulling away with it a little bit now. As of a few minutes ago, it was exactly 60% for Tesla, only 40% for Bitcoin. You're a Bitcoin lover. You're a hodler out there. Get over there at Options. Make your voice heard like a lot of you already have. A lot of you people have opinions on this one. Go figure. Two very hot, very controversial names. Just like Ask Crow here chiming in saying neither of them. Well, okay. We didn't put that as a choice, but that could certainly be a valid opinion out there as well. So let us know what you think will hit the 1T level next. Tesla or Bitcoin. Let's move on out. We like you folks in the live chat, so we like to bump you guys up ahead. It's not like we don't like you podcast listeners. We like you all. But the live chatters, they get to bump up to the top of the list, just like a good old friend here, Mr. Tony Weber. He's lurking out there in the chat. He says the guest, I'm assuming he means Don, maybe Bob. The guest mentioned the 11-point gap between realized and implied volatility. I'm assuming this means our options workout strategy should be working. Our ABS are always be selling, as opposed to our BUM, buying underlying market. Maybe sell the calendar or iron condor, always be selling. Well, Don, sounds like they have coined a new strategy in your honor, sir, the always be selling strategy. So, A, are you on board with that? Even though I know you also sometimes choose not to sell. And it sounds like, as Tony wants to know, Don, do you think if you had that proverbial strategy on, the always be selling, do you think you'd have a smile on your face right now, Mr. Don?
It's important to consider that second part, which is, I did make a living of selling option premium, but but there were times when you wanted to step aside and not sell and get caught up in some of the frenzy. Reason I didn't necessarily enjoy buying at those times was obviously because of the tremendously high implied volatilities and the premiums that you were paying. But, again, in reference to that gap, I do believe that will narrow. It may not happen overnight. It may be gradual, but I don't think that kind of a risk premium of implied volatility over realized is sustainable in the long run. And so, although I do believe that actual realized volatility will probably increase as well, the point is that they're probably going to meet in the middle somewhere and see the implieds come down. So despite the craziness of what's going on in the world, it still seems to me that there's profit in fading and selling realized selling implied volatilities.
Oh, Don saying don't sit on your hands. Get out there. You can still be selling. It's not a time to not sell the latter portion of his infamous equation. Speaking of latter portions, we usually limit folks to one question, but I'll be nice. Tony has a corollary to his. He wants to know what happened to the disaster Tesla puts. Are they still out there? Did they get recalled with much of Tesla's inventory? Well, you wouldn't know from the stock out there, Tony. That stock's not budging despite a massive recall. But what hasn't budged as well are those catastrophe puts out there in Tesla. Yes, they still are open for size. 181,000 of the Jan 1 puts going out tomorrow. They were the number one open interest position in Tesla options. They have now been eclipsed by the seemingly outlandish February 20 puts. 209,000 of those are open. So that is now the new number one position, undoubtedly because these other Tesla catastrophe puts are going the way of the dodo here. So they're going out tomorrow. And also we have the Jan 20 puts going out tomorrow as well. That's number 3 with 178,000 contracts on the tape as well. And then number 4, the June 1 puts. There's 108,000 of those. And round out the top 5 here, the Jan 2 puts with 100,000, pretty much even. So that's your top 5. Well over 500,000 contracts in crazy, garbage, outlandish Jan and a little bit of Feb puts with a smattering of June as well. And most of that going away tomorrow. And yeah, so they're still open. Short answer to your question there, Tony. They are still open. Just a reminder out there, if you're listening live, your questions do get bumped up here to the top of the list. Here's a question that's on. Well, actually, before we get to this, since we got Bob and Donna, let's jump to this one from AJ, because they are actually the keepers of the realized volatility rankings. We touched on this on our TWIFO program. We talked about some historical volatility that went up on some of those products. But Bob and Don are out there actually crunching the numbers. So Bob and Don, I'll toss this to you. Whoever wants to take it can have at it. They want to know, what was the most volatile asset in 2020? I know you guys crunch the numbers for a bunch of assets. You do the S&P, you do energy, you do metals, you do a bunch of stuff out there. So for the assets you're calculating realized vol on right now, gentlemen, what was your most volatile name for 2020?
I mean, we can get that info, and it's actually not that difficult. I just don't have it on the top of my head right now.
So I can tell listeners that a lot more recently, gold and silver seem to be topping the chart for the last couple of weeks, and silver in particular made a tremendous move from 28 to 47 in actual volatility and ranking 93rd percentile, which means that 93% of the time silver volatility is lower than it is right now. Gold in a similar spot was up 77% for the week, and usually lower than this volatility, which is currently 80% of the time. So gold, silver, natural gas, the S&P mid-cap 400, those are the ones topping the chart at the moment.
I would like to make a point. When when the COVID thing was starting and March was getting crazy and the equity markets were falling, about 75-80% of every asset that we followed was in the 90th percentile or higher. Many of them at the 100th percentile. They've never been higher. So I've never seen that. No, as far back as we went in history, that so many assets hit so many highs all at the same time.
Yeah.
Even when you're talking about, risk on, risk off kind of stuff, this was really unprecedented. And we use that term a lot this last year, but
that's pretty much the one term you can use to describe the entirety of 2020. It was unprecedented in just about every regard, listeners. Keep those questions coming. Maybe we'll have Bob and Don crunch the numbers for you, and maybe we'll tweet it out after the show or something for the year. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on for the rest of this week into the weekend. A little bit longer term this time, because remember, listeners, we are off for the Martin Luther King holiday here in the U.S. on Monday, so unfortunately, no option block show on Monday, but unfortunately we get a nice long weekend here in the U.S. That's kind of nice, at least. So we have to extend our analysis all the way through to our next show on Thursday. Mr. Uncle Mike, sir, we will start with you. What are you keeping an eye on for throughout this holiday weekend into our next show on Thursday, sir?
Well, anything in the news. I think that a lot of the threats that are going on for violence across state capitals across the country, to see what could possibly happen. Got to keep an eye on that. But in reality, I'll say the word unprecedented again. It's unprecedented that we have these many crazy things happening and have this little relative market moves compared to what we've based on what we've actually had in the last few months. So I'm not talking about last spring, of course, but it's really amazing the unprecedented way with which the events have been going. So watching that, and of course seeing if we can hold 3,800 in the SPX.
All right, thank you for that, sir. Mr. Rock Lobster, same question for you. What are you and or Vol Man keeping an eye on, at least until Vol Views tomorrow, and of course until our next option block episode, easy for me to say, all the way on next Thursday, sir?
Yes, I just realized Vol Man might be on Vol Views tomorrow, I believe.
Is that a threat? Are you threatening me right now with bringing Vol Man back on?
I'm threatening you with the red stick man. He's going to wave his umbrella at you and pound you on the head with it. So what am I looking at? Yeah, I'm convinced that a good chunk of this vol, maybe 1 or 2 points of VIX, is all this election freakout. Just like we had a 40 VIX when Trump and Biden were running, when everybody was casting their vote. So I just see 2 things. I see the vaccines are now rolling out at high speed. I see relatively cheap some of these. Pharmaceutical stops that are rolling out the vaccines, like Pfizer and stuff, they're not even close to their highs. So interesting plays for those that want more long-term investments, because that vaccine thing ain't going away for a long time. And just seeing if we could actually, if we get through what Friday and Tuesday could look like, if we have sort of a, I'm sure there'll be crazies out on the weekend, but what does that look like going into Inauguration Day? I think the vol curve VXX is setting up for potentially a big smash because there's some pretty serious premium in it at a 25. Looking at, just very low, 10, 11 vol. So it is setting up where when and how fast this vol comes out, I don't know, but it has some of my money right now. That's all I'm going to say.
And that music means that's pretty much all we're going to say for this episode as well. But before we go, we'll kind of do a condensed around the horn here. So Bob and Don, if you guys have anything you want to share really quickly about what you're keeping an eye on for in the vol space right now, have at it. And then B, more importantly, if folks are intrigued, they want to learn more about demand derivatives, they want to check out your RealVol indices, they want to check out your crowdfunding. I know you have a survey out there about the futures markets too. Where should they go? What should they do, gentlemen?
Okay, thanks. Yeah, perfect, Mark. Thanks. Yes, we have a survey, and so if you're part of the Options Insider, you're going to be getting an email pretty soon. We would appreciate you spending a few minutes on that. We tried to keep it short, but we got a lot of questions, so it was a tough balancing act there. But if you could, we'll give you a free month's worth of trading on our exchange when we launch, and you'll get a chance to win a $100 Amazon gift card. And in addition to that, we have our crowdfunding going on, and the minimum is only $105. And if you invest that, you get 6 months worth of trading for free. So you can get 7 months worth of trading for free for $105 and answering our survey. So you can also get our weekly realized vol rankings. That's free. You don't even have to register. You can get that on our website. So how do you get all that? Just go to demandderivatives.com. At the top is the crowdfunding button. The survey will be coming in your email, and the weekly rankings is a little button next to RealVol.
There you go. Check it all out for yourselves. It's a lot you get for $105 and a little bit of time to fill out a survey over there. So check it all out for yourselves. DemandDerivatives.com is the place to go to begin that journey. And Mr. Uncle Mike, if folks want to begin their journey through these turbulent markets, have someone guide them, where should they go? What should they do?
stcharleswealth.com if you'd like to look at a traditional financial advisor who's untraditional and that he uses the option product. stcharleswealth.com. Would love to have a conversation with anybody.
There you go. Hit the man up, St. Charles Wealth. He's not going to do anything on Monday. He's off. The markets are closed, so hit him up. See what he's up to. And last but not least, Mr. Rock Lobster, if folks want to reach out to Volman and have a webinar or a conversation with him, where should they go? What should they do?
Go to optionpit.com, go to your memberships page, see all the goodies we have. We've got a ton. If you want trade ideas or you want to learn old-fashioned from an old guy like me, been trading options for 30 years, how to survive in all vol markets, all conditions, come to Option Pit, and we'll certainly teach you how. We've been doing it now, unbelievably, for 10 years.
Crazy.
So there's got to be something there. Crazy.
So. Hard to believe. We're coming up. We just launched our 14, so it's crazy. These numbers that we're throwing out there. It just seems like just yesterday I had this whim to throw together this crazy site and this podcast, and then a few years later you guys came along and bam, the madness that has ensued. Check them out. OptionPit.com is the place to go. Speaking of checking things out, listeners, stay tuned. If you're listening live, we'll pump some fun stuff into the live chat. We'll be back in less than half an hour now. We ran a little bit long today. We'll be back in about 25 minutes with beaming in from the FTSE Russell studios and everyone else to chat about all things going on in the world of futures options. If you like what we just touched on now, talking about realized vol and some assets, well, stay tuned. We'll get into all of that. We'll get into the skew, all the action, all that good stuff, and a whole bunch more in the land of futures options. And we're back again tomorrow. Sounds like maybe with a Vol Man at noon Central, 1 p.m. Eastern for Vol Views. Then we're off again on Monday, and then back again on Thursday for another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.